this video we are going to talk about, can Bitcoin still be trusted? So before starting, please like this video and subscribe to this channel for our future updates. Any new technology or notion will inevitably face difficulties in gaining trust. Consider the internet warnings of the 1990s. Or anyone else who was concerned that trains were moving too fast for ladies to ride. Consider the trepidation expressed when someone suggested moving from quill to pen. When new ideas emerge, it's natural for them to be scrutinized and implemented warily. The same is true for Bitcoin and other cryptocurrencies. Investors are more interested in cryptocurrency than ever before. Criminals are as well. According to a report from CryptoHead, a cryptocurrency news outlet that used Federal Trade Commission data to analyze cryptocurrency crime trends in recent years, reports of cryptocurrency crimes have increased 312% per year on average since 2016. These crimes can range from hackers stealing investors' money to people falling for cryptocurrency investment scams. Bitcoin has the most reported crimes of any cryptocurrency, which is understandable given that it is also the oldest and most widely held. Aside from cybercrime, Bitcoin's financial security is often questioned because of how often and how much its value changes. Despite an increase in fraud and theft, many experts claim that Bitcoin investments are safe, at least in terms of cybersecurity, if not investment stability, due to secure blockchain technology. So, is it safe to invest in Bitcoin? Here's all you need to know about Bitcoin's asset safety and how to keep your Bitcoin safe if you decide to invest. What to consider before buying Bitcoin. To begin with, the most important thing, the value of the money you invest in Bitcoin cannot be guaranteed to remain constant. Bitcoin is a risky asset for investors to hold. Do not put your money into Bitcoin, or any other cryptocurrency for that matter, if you are searching for a secure investment that will ensure a return on your investment. During the course of the previous several months alone, the price of one Bitcoin has ranged anywhere from $30,000 to $60,000. There are many more volatile cryptocurrencies besides Bitcoin, and some of the lesser-known coins may be much riskier. According to Dan Herron, a certified financial planner working with Elemental Wealth Advisors in San Luis Obispo, California, understand that these are quite volatile assets, so if you find that large fluctuations cause you to lose sleep, this isn't the space for you. As a result, financial advisors advise limiting any cryptocurrency investments to less than 5% of your overall portfolio, and they also emphasize the importance of having a solid traditional retirement investing plan in place before making any cryptocurrency investments at all. Before you put any of your money into Bitcoin or any other cryptocurrency, you should definitely set up an emergency fund and pay off any debts with a high interest rate. What are the risks associated with Bitcoin? As with any other form of digital activity, the possibility of being hacked or defrauded is the primary source of anxiety for many individuals with regard to the security of their Bitcoin investments. According to data from the Federal Trade Commission, cryptocurrency crimes are on the rise, and between October 2020 and March 2021, each report resulted in a median loss of $1,900. The data was collected between 2020 and 2021. According to the Federal Trade Commission, FTC, the majority of recorded offenses using cryptocurrencies involve con artists asking for payment in Bitcoin or delivering unsolicited proposals to assist you in making money or increasing your holdings. According to the regulatory organization, anyone who says you must pay via cryptocurrency is a sure sign that you are being taken advantage of. You should also steer clear of any unsolicited offers that are associated with cryptocurrency. You should instead do your own research and buy your coins directly from a reputable cryptocurrency exchange. Other types of scams to look out for. Initial coin offerings, ICOs, for fake cryptocurrencies. An initial coin offering, or ICO, is the term used for the process that is analogous to the initial public offering, IPO, of a new stock. This occurs prior to the launch of the cryptocurrency on the market. However, these new coin offerings can, on occasion, be made up, which may cause investors to deposit their money into a cryptocurrency that does not in fact exist. Before investing in any cryptocurrency, you should always do your homework first. If something seems too good to be true, there's a strong chance it is. As part of your investigation, you should read the white paper for the project and look into the background of the founders. Most investors, especially those who are just starting out, should stick to well-known and widely traded coins like Bitcoin and Ethereum. Crypto pump and dump schemes. It's possible that a small group of investors will put a lot of money into a particular cryptocurrency, artificially boosting the price while also persuading individual investors to put their money in. The initial investors will then sell their shares at a higher price in order to realize a profit before the price drops again. This method can also be used for investments that are considered more conventional. To reiterate, if an investment opportunity appears to be too good to be true, it most likely is. The advice given in the Crypto Head Report is to exercise caution with regard to cryptocurrencies that have witnessed significant price increases despite the absence of any obvious motivating factor. It's possible that this is an indication of a pump and dump scam. How to keep your Bitcoin safe. In order to steal Bitcoin assets, hackers can either breach entire cryptocurrency exchanges or obtain access to the cryptocurrency wallets of individual users. Because of this, it is very important to keep your cryptocurrency in a safe place and to develop and keep good digital security habits. Hot wallets are an option for storing cryptocurrency offered by cryptocurrency exchanges and third parties. These wallets are safe, but they are connected to the internet, and therefore still susceptible to hacking. Money kept in a wallet or on an exchange is not protected by the FDIC in the same way that money kept in a bank is. Be sure to trade and hold your cryptocurrency on a platform that provides rigorous security measures, such as storing a major portion of its holdings in its own cold storage and requiring users to authenticate themselves using 2 different methods of identification. It's possible that some exchanges even have their own private insurance coverage in case their users' funds are stolen or hacked. A cold storage method employing an offline device that is not linked to the internet, such as a USB drive, is widely recommended by industry professionals as the most effective defense against online fraud. But even cold storage has its drawbacks, such as the fact that if you forget your password, there's a chance you won't be able to get back in to retrieve your investment at all. Bitcoin security versus privacy. While you can protect your crypto assets from hackers and theft, it may not be any more effective than any other traditional investment at keeping your personal information private. Security and privacy are 2 different things, explains Kiana Danielle, author of Cryptocurrency Investing for Dummies and Instagram user at Investiva. While Bitcoin transactions are more difficult to track than credit card purchases or direct bank withdrawals, they are not private. According to Ali Leach, learning editor at CoinDesk, a popular cryptocurrency news outlet, Bitcoin exchanges are coupled with a hash code, a string of letters and numbers that is unique to you. You're more like pseudonymous than anonymous, explains Galen Moore, CoinDesk's director of data and indexes. While your activity isn't directly linked to personal information like your SSN, the blockchain is public, and there are ways for others to identify you. However, just because Bitcoin transactions aren't private doesn't mean that everyone can see how much each other has bought or sold. You'd need tremendous, massive computational capability, like a supercomputer, to download the Bitcoin blockchain, Danielle explains. The average Joe can't look into the Bitcoin blockchain and see what transactions are going on. Bitcoin and Ethereum, the second largest cryptocurrency by market capitalization, are not for you if you seek complete privacy when transacting. Other, smaller cryptocurrencies are designed to provide complete secrecy, though experts advise against investing in these less well-known cryptocurrencies. All that transaction information being accessible is part of how the network is maintained as people observe with Bitcoin and Ethereum, Moore explains. The blockchain's open structure aids in maintaining accountability. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.